Toronto Real Estate Board published the market stats for the month of June, which comes out early July. Rising interest rates resulted in higher borrowing costs, which has continued to impact home sales in June. The total number of sales for the month was 6,474, down by 41% compared to last year's very strong result. Month over month, the number of transactions was also down compared to the previous month of May, but this is often the case due to seasonal nature of the market. The average selling price at $1,146,254 remained 5.3% above the previous year's June 2021 level, but the average selling price has continued to trend lower on a monthly basis. The MLS Home Price Index composite benchmark was up by 17.9% year over year, but also experienced a month-over-month dip compared to May. Annual price growth was driven more by less expensive market segments, including townhouses and condominium apartments. The Toronto Real Estate Board President Kevin Krieger reported that home sales have been impacted both by the affordability challenge presented by mortgage rate hikes and the psychological effect wherein home buyers who can afford higher borrowing costs have put their decisions on hold to see where home prices end up. Expect current market conditions to remain in place during the slower summer months. Once home prices stabilize, some buyers will re-enter the market despite higher borrowing costs. Although the number of transactions was down year over year, the number of new listings saw little change over the same period, and this has provided for a more balance in the marketplace, resulting in more moderate annual pace of price growth. So what should we expect to see as we move forward? Unfortunately, we do not have a crystal ball. However, using data, we can infer market trends. Chief Market Analyst Jason Mercer with the Toronto Regional Real Estate Board reported that listings will be an important indicator to watch over the next few months. With the unemployment rate low, the majority of households aren't in a position where they need to sell their home. If would-be sellers decide to take a wait-and-see attitude over the next few months, it's possible that active listings could trend lower as well, and this could cause market conditions to tighten somewhat, providing some support for home prices. We know that Toronto and its surrounding areas are continuing to grow as it attracts businesses from all around the world. As the population increases, we know that these people will require a place to live, whether they choose to buy or rent. And as the Toronto Regional Real Estate Board CEO, John Michel, stated, despite the shorter-term impact of higher borrowing costs, housing demand will remain strong over the long term as long as we can produce homes within which people can live. Policy makers at all levels need to make this their goal. Now let's take a look at the market numbers for Peel Region, being Caledon, Mississauga, and Brampton, as well as the Halton Hills and Orangeville communities. We will begin with a look at the economic indicators. So let's take a look at the economic indicators for the month of June. We can see for the first quarter, the GDP was down to 3.1%, but unemployment is very low. It actually was down for the month of May by 6.2%, and the employment rate is actually strong, and it went up by 8.5%. Inflation is also up, unfortunately, at 7.7%, and this has really forced the government to take action. And what they've been doing is they have been increasing the Bank of Canada overnight lending rate in order to try and curb inflation. And obviously, as a result of this, we are seeing an increase in the lending rates for mortgages. So for the month of June, we did have an increase, and the overnight lending rate was sitting at 1.5%. We knew that as of July, we were going to see an increase of the rates, but we were expecting 75 basis points. And to our surprise, on June 13th, the rates increased by 1 full percentage point. So we ended up having an increase to 2.5%, and that obviously is resulting in higher mortgage rates. On June the 13th, the Bank of Canada raised the overnight lending rate by 1 full percent. We were expecting 75 basis points, but In its most aggressive increase in interest rates since 1998, the Central Bank Governing Council raised the policy rate to 2.5% from 1.5% that we previously saw in June, which was 1 full percent. And this is 4 times the size of the typical rate increases, and it's signaling that we expect more rate increases to come. We have all been accustomed to unprecedented low interest rates during the pandemic, and although rates are increasing, which ultimately affects buyers' qualification limits, their monthly payments, and their ability to buy, the current rates overall are still historically low. Let's take a look at the chart below that shows conventional mortgage 5-year fixed interest rates for the last 50 years. From this graph, we can see that interest rates are still on the low end, historically speaking. As interest rates continue to rise, some buyers are opting for a wait-and-see philosophy, hoping that interest rate decreases, that prices will also decrease. Although none of us have a crystal ball, it's highly unlikely that both interest rates and prices will both decrease at the same time in the near future. So what does that mean? Let's look at an example below to show how prices and interest rates and affordability all play together. So let's take a look at the community stats for our various regions. We're going to start with Dufferin County and Orangeville for the month of June. We can see that new listings were down slightly from the previous month, which was 123, and for the month of June, we were sitting at 93 new listings. Active listings was also up slightly from 86, and we are now sitting for the month of June at 99. The number of sales was down slightly from 46 the previous month, and for June, 41 reported sales. Days on market has also increased from 13 days previous month to 16 days for the month of June. The median sold price for all housing styles was up slightly, only by $1,000 to $850,000. Months of inventory is sitting at 0.41. Median sale price for a detached home was up slightly from $924,950 to June's number reported at $962,500. Semi-detached homes was also reported slightly down from previous month of $672,500 to the month of June's reported number at $651,000. Townhomes was up slightly from $770,500 to June's reported numbers of $832,500. Our next community lies within the region of Halton, and specifically Halton Hills, which incorporates Georgetown and Acton. So for the month of June, the number of new listings was down slightly to 207. Previous month reported at 219. Active listings was up slightly from the previous month of 174 to 193. Number of sales was also down slightly from 83 sales reported for the month of May to 72 sales for the month of June. Days on market increased from 11 days on market to 16. Median sold price was also down slightly from $1,225,000 to $1,050,000 reported for all housing styles. Months of inventory is sitting at 0.37. Median sale price of a detached home was down slightly from previous $1,327,000 to $1,275,000. Semi-detached homes was up from $800,000 reported for the month of May to $968,750 for June. Townhomes was down slightly from $975,000 to $890,000. We are now going to look into the region of Peel, and we're going to start with the city of Brampton. So for the month of June, the number of new listings in Brampton was down slightly. The previous month reported 1,646 new listings, and for June, we were sitting at 1,467 new listings. Active listings were up slightly from the previous month of 1,268 to 1,303. Solds were down slightly from 670 the previous month to 518 for the month of June. And days on market has increased slightly from 12 days on market to 15 days on market. The months of inventory is sitting at 0.39. For detached homes, the median sale price was down slightly from $1,281,500 reported for the month of May to $1,190,000 reported for June. Semi-detached homes is currently sitting at a median sale price of $985,000, down from $1,011,000 for the month of May. And townhomes are also down slightly from $967,500 to $915,000 reported for the month of June. Next on our list is the town of Caledon. So the town of Caledon new listings was down quite significantly for the month of May. We had 264 new listings, and for the month of June, we reported 199 new listings. The number of active listings was up slightly from a previous number of 240 to 257 for the month of June. Number of sales was down from 77 to 58, and days on market increased from 13 days on market to 19 days on market. Median sale price was up slightly from $1,330,000 reported for the month of May to $1,342,500 reported for the month of June. Months of inventory for the month of June is sitting at 0.22. Detached home prices were up slightly from the previous month of $1,501,111 to a new median price of $1,571,000. Semi-detached was down slightly from the previous month of $1,150,000 to $1,015,000. Townhomes were down slightly from the previous month, reported at $995,000 to $962,500 for the month of June. And our final community is Mississauga. For the month of June, the number of new listings is down from the previous month of 1,766 to 1,612. Active listings are up slightly to 1,526 from the previous month, reported at 1,444. Number of sales is down slightly from the previous month of 630. We were sitting at 596 for the month of June. Days on market has increased slightly from 12 to 16 days on market. Months of inventory is sitting at 0.39. Detached homes, the median sale price dropped slightly from $1,520,000 to $1,425,000. Semi-detached homes were slightly down to $1,047,500 from the previous month of $1,095,000. And for townhomes, we were pretty much the same, $2,000 difference. We reported $1,067,500 to June's median sale price of $1,065,000. So what does all these numbers mean? It means that we are seeing a definite shift in the market. We are seeing longer days on market. For the most part, we are seeing the number of sales decreasing and the number of active listings increasing. So we can see now the supply and demand is shifting to a more balanced market. If you have any questions about what is happening in your neighborhood, or perhaps you are wondering, what is my home worth in today's market? You can schedule a 15-minute call, no obligation. Simply click on the link below to schedule a call when it's convenient to you. My name is Evelyn Lopez with the Evelyn Lopez Realty team and iPro Realty, and I'm here to help.